Welcome to CFO Insight TV. Cash management is a big priority still for corporate treasurers and CFOs across Europe. And Gerry Barber, a managing director with BNY Mellon, has been a keen observer and market participant in cash management for several years. And I'm delighted to have him here in the studio with CFO Insight TV. Gerry, hi.
Thanks, Steve. Hi, nice to see you.
So how difficult has it become to find these investment opportunities?
I'd say increasingly so. Certainly throughout this year, from July this year when the ECB cut its headline rates and its overnight deposit rate, that has caused the overnight markets to go down on a wholesale basis. We are seeing a lot of corporates being charged potentially to hold deposits with banks because banks are very liquid today. So it is becoming increasingly a challenge, not just about what you earn, but also where do you put your money from a risk perspective.
When you look at the corporate treasurers you deal with, what has this change meant for them, for their sort of professional development? Has it changed the way they go about their business? I
think that's an interesting point, and I think if I go back to what happened with Lehman's and when Lehman's collapsed, a lot of corporate treasurers at that point, for cash management and liquidity management within corporates, it was a part-time job. It was part of somebody else's role. Since then, increasingly, it's become a much more professional environment with larger corporates especially putting into place very defined investment guidelines, risk parameters, board oversight and approval. So it's become a lot more professional, I'd say. With what's going on in the market today with the rates, that's not changing. If anything, it's becoming more and more important about professional qualifications for treasurers today.
You just said some treasurers actually have to pay the bank to leave their money with them. What sort of treasurers would a bank such as yours to look at to take on as clients, and vice versa? What would a treasurer look at in a bank they want to work with?
I think what they're looking for with a bank is confidence in the bank in terms of its safety. The ratings of the bank and therefore the liquidity of the bank as well is an important factor. And I think increasingly that's where you see banks that are charging corporates for leaving deposits there. They're the ones who are very liquid and are very perceived to be very safe institutions as well. So, and I think that from that perspective, any treasurer in any corporate environment is always looking at the safety of the relationship that they have with their bank. What they're concerned about today is not so much the yield, it's do I get my money back?
Recently, over the recent years, many foreign banks have actually withdrawn from their foreign markets back to the domestic markets. Do you think this has impacted the way corporate treasurers can manage their cash?
No, I don't, because I think we live in a global environment today. So a lot of corporate treasurers are dealing with cash with institutions that are still global in nature. A lot of corporates today have outlets within all over the world, across Europe, Asia and the Americas. And I think increasingly what I have seen from a corporate treasury point of view is an integration of corporate treasurers into one centralized center for the company and then managing liquidity on a global basis. For that point, what they really want is a global partner. So I'd say the smaller institutions that are withdrawn back to domestic markets, yes, they were going to see less flow, but the global institutions, and I'd like to put ourselves in that position, we're actually seeing increased activity.
Cash management is very much an IT-driven business. Can you say anything about the IT trends you're expecting for 2013?
I think in terms of IT trends, increasingly automation where we can to cut out expense within there is important. BNY Mellon, as an example, I'll make a little plug here. We spend some in the region of $1.9 billion on technology every single year. That includes maintenance, keeping the lights on, and also development. So IT for us and our clients is an extremely important factor.
But where will that spend go, that you just mentioned? I
think a lot of that spend is going to go into efficiency and how do you improve the processing of moving payments whether it's technology, but what you're trying to do is cut out human intervention within there. Make it straight through processing as much as you can, keep it really simple so the money's in the right place at the right time.
We're now approaching the end of our interview, and I'm going to ask you 3 questions, and I would like to ask you to answer them with yes or no if possible. Corporate cash balances have been growing over the past years. Do you think that's a trend that will continue throughout in 2013?
Whether it continues to 2013, only the corporate treasurers will know. But I think what you're looking at is corporate treasurers are now having to make a decision in terms of how they're going to spend that cash. I don't think they're going to grow significantly. I think what you're going to see is corporate treasurers using more of the cash to pay down debt. They've been holding cash pending investment. Depends on the economy and how confident they are making investment into their their own infrastructure and their own businesses.
So your answer is, I don't really know.
I think it's a hard one to tell at this stage.
Do you think 2013 will be a year of cash management evolution or revolution?
I think it's going to be a process of continued evolution.
And do you think counterparty risk, bank risk, will remain a top priority for corporate treasurers?
Absolutely. And I think one of the things I've seen change significantly this year, and I expect to see that go into 2013 and beyond, is increasingly corporates are asking for, if they're leaving cash with institutions, they're asking for collateral in return for that. So they're actually wanting to protect the downside in case that institution isn't around. So I think that focus on risk management is going to increase and not go away.
Well, thank you very much, Gerry, for joining us here.
Thank you, Steve.
And thank you for watching.